Right, students. Today we will try to complete the rest of the part, okay, the remaining part of monthly policy review document 2026, okay. In last video, we have discussed some important aspects, the first part, first half of the document. Today we will try to complete it, okay. So the next area I'm discussing is finance, okay. Uh, Okay, the Ministry of Finance has amended the foreign investment rules, okay, for the insurance sector. You see, foreign investment, whether it is FDI or FII, it is restricted in some strategic sectors like defense, insurance, news, okay, or media, etc. Now, whatever the restrictions that were there in the insurance sector, all of them have been removed. Now you can say effectively 100% of foreign investment is allowed into insurance sector also. Okay. So the Ministry of Finance, it has notified the foreign exchange management, non-debt instruments second amendment rules for amending the 2019 framework. You see, the latest framework before was 2019 and the present rules are amending that one. Okay. You see, the rules regulate the investments in Indian non-debt financial instruments by persons residing outside India. Okay, so two sets of changes are there. One thing is something related to investment itself, and the second one is about the definition of NRIs, no, I mean non-resident Indians or people who are not residing in India, and that is for the purpose of investing in the insurance sector. Okay, right. And it's the government is saying that, or the ministry is saying that it is to modernize the insurance sector, modernize the policy. Okay. So first set of changes, important change was removal of investment ceiling in insurance companies. Okay, right. You see, the 2019 rules say that there is the foreign investment is capped at 74%. Okay, they cannot invest more than 74%. So what is the meaning of it? The rest 26% will be within the hands of Indians or Indian nationals. What was the purpose of this one? There was a fear that the insurance governing rules or whatever the company, insurance company is there, to prevent it from taking radical decisions that may impact the Indian people. I mean, people who have purchased insurance. Okay. Now, the 74% limit is also done away with, and now, according to the 2026 rules, foreign investment can be up to 100%. Means, effectively, it can be entirely owned by the foreign or people who are not residing in India. Okay. So that is allowed. 100% investment into insurance sector is allowed under the automatic route. Means no prior permission is required. Okay, right. But there is one exemption. What is the exemption? Exemption is given for LIC. You see, foreign investments in the LIC, they remain capped at 20%. Okay, why? LIC is a center public sector enterprise. It is a prestigious one. Okay, and so government wants to keep its nature or ownership structure intact. It don't want to dilute it. Okay. So 2019 cap in the insurance sector was 74%. Now it has become 100%. Second one is relaxation of residency requirements for the purpose of investing in the insurance sector. We understand the previous structure or previous framework. Majority residency is required for board of directors, key management persons, chairperson, MD or CEO. Majority residency means, it's like at least 180 days people have to reside in India. That is the majority residence. Now, if you see the latest change, there is a significant liberalization residency requirements are received for board of directors and management also. Okay. So the requirement is restricted to at least one among the chairperson, MD or CEO. They have to majority of the time in an year they have to reside in India. Okay. So you can say there is a dilution or liberalization. Why earlier there were too many restrictions? Because the sectors like insurance, banking, for that matter, defense, media, they are very sensitive. Okay, they are very much associated with the people and economic security, strategic significance of the country. Everything is dependent on these sectors. So earlier, the governments tried to protect or guard these sectors from the foreign investment. Now, maybe because of the policy of the government or in the flesh of the liberalization, in the flow of liberalization, privatization, and globalization, government is further and further liberalizing these sectors. Okay, so this is about the insurance sector. One important item is there, that is Reserve Bank of India inviting comments on the loan recovery agent conduct. A very important topic. Why? The especially the entities which are giving loans to people, especially these online loans, they are harassing people, or the recovery methods of recovery are not at all good. Some of them are harassing the people. You know, and it led to suicides for many people. In that context, RBI is seeking comments on loan recovery agent conduct and how to restrict it. Okay. So the comments were sought on conduct of regulated entities in recovery of loans and engagement of recovery agents. It is applicable for commercial banks, why they are also giving loans, cooperative banks, and NBFCs, non-banking finance companies. Especially, mostly the problem is coming with the online based lending platforms. Okay. N number of platforms have come and they are giving loans, but their recovery methods are not at all good. In that context, the comments have been sought. Okay. So some draft guidelines or rules have been issued by the Reserve Bank of India. One by one, we will see. First is something related to restrictions on technology-based loan recovery. Means in this, it is mentioned that the lending companies do not have power, or they are prohibited from switching off or turning off the phone of the uh, you know uh, person who has taken the loan. Okay, and they are also prohibited from disabling essential SOS services and other emergency features. Okay, then uh, the rules prohibit the lending entities from using recovery mechanisms such as disabling the borrower's mobile device. Okay. One exception is given if the loan has been used for purchasing a mobile phone or device, maybe then they might be allowed to switch it off. Okay. Then the companies have to only, or the financing agencies have to start the recovery only after the 90 days. Okay, means when it turns bad. Okay, NPA, when the loan becomes an NPA, they should not start it immediately. Means the borrower has missed one EMI. The financial entities should not start recovery immediately. They have to send multiple notices. They have to wait until 90 days. Okay, then only they have to start the recovery mechanism. Okay, this is one thing. Second thing is restrictions on loan recovery conduct also. Okay, first the person or borrower has to be given adequate opportunity for getting grievance redressal. Okay, you see, the lending agencies must not forward cases to recovery agents until the grievances that are being lodged by the borrowers are fully disposed of. Okay. And further, the draft rules remove the current infrivolous or vexatious complaint exception. Each and every complaint has to be addressed or disposed of properly. Then only they have to, or the case has to be transferred to the recovery agent. Okay. And sending advance notices are mandatory. Okay. You see, entities must notify borrowers before the first in-person visit. How it has to be done? At least 1 day prior, prior intimation via SMS or email, and at least 3 days prior intimation via letter. This has to be done. Okay. And you see, these recovery agents, they must complete a training and be certified by the IIBF. Okay. You cannot, recruit some random gundas, rowdy cheaters. That is happening actually. If you see in vehicle loans, vehicles which are purchased, vehicle loan recovery, the financing companies are literally, employing the gundas, rowdies to, catch the vehicle. Okay. No, it should not be like that. They have to be properly trained, and they have to be approved by the IIBF. Okay. Right. Then we will come to very, very important component, that is agriculture. Lot of important information is there. You try to remember it. Very essential. Okay. So the cabinet committee approves MSP for Kharif crops. The season is 2026-27 season. Okay, you know very well, before every cropping season, uh, the Cabinet Committee on Economic Affairs, it approves the MSP that is recommended by um, uh, sorry, uh, the Committee on Agricultural Costs and Prices, okay, CCPA, that is there. Generally, it recommends, and Cabinet Committee on Economic Affairs, it has the final authority to approve it. Okay. So Union Cabinet approved the increase of minimum support price to ensure remunerative prices to farmers, and to support and encourage, particular type of crops, MSP will be done. Everything background about the MSP you will study in the foundation course, economics foundation course. You know very well what is MSP. It is the assured price at which the government promises to procure, crops from the farmers. Okay, minimum this much price will be paid to the farmers when it is procured by the government, means the, Food Corporation of India. Generally, it procures the crops from the farmers on behalf of the government. Okay. So we will see the increase for some important crops. For paddy, the most important crop in our country, it has seen an increase of 3% over the previous year, and it is applicable for this season. The maximum rise has been seen in these crops. Jowar, 9% increase is there. Sunflower, 8% increase is there. Soybean 7%. Cotton, 7%. Okay. So prices are listed here. You can go through the prices. Paddy, the present price, announced price is 2,441. Jowar, 4,023 rupees. Ragi, 5,205 rupees. Tur or Arhar, red gram, 8,450. Urad, okay, 8,200 rupees. Sunflower seeds, 8,343. Soya 5,708. Cotton, 8,267. Like that, in total, for 22 crops, MSP will be announced in the, Kharif season or in the beginning of the sowing season. Plus, along with that, for one more crop, FRP, fair and remunerative price, will be announced. That is sugar. Okay. So try to remember the MSP for few crops. Need not remember the price for each and every crop. Okay. Then FRP, we will come to FRP for sugarcane for the season of 2026-27. Okay. Cabinet approved the FRP for this season. Okay. So to once again to ensure fair returns to the sugarcane farmers. Base FRP is 365 rupees per quintal. Okay. This rate will apply when recovery rate is 10.25%. What is it? It is the, the sucrose content. that is there in the sugarcane. Okay, sucrose percentage recovery shall be 10.25%. Then per quintal 365 rupees will be paid to the farmer. Okay, you see, this is the minimum price, and it is the sugar mills are legally required to pay this to the sugarcane farmers. Okay, it is legal, but one thing you have to remember that MSP is not legal, whereas FRP is legal. Okay, right. One thing you have to see here is this is the minimum required or standard or base recovery rate. If the recovery rate increases by 0.1%, like it becomes 10.26, 10.27, etc., for every increase of 0.1%, additional 3.56 rupees per quintal have to be paid to the farmers. Okay, increase is there. Simultaneously, for every 0.1% of a decline in recovery, same amount, rupees 3.56 per quintal will be reduced from the FRP that is paid to the farmer. But however, there shall be no financial decline if the below the 9.5 recovery rate, means whatever the price comes there, that price have to be paid, even the recovery rate is well below the 9.5%. Okay, very important information, you try to remember it. Okay, very important for both prelims and mains. Okay, right. The next one, cabinet approves mission for cotton productivity. Very, very important. You see, cotton is one of the important commercial crops that are grown in our country. And you know very well, the farmers are facing a lot of problems. Pest attack, major problem that is being suffered by cotton crops is pest attack. Okay. So keeping that thing in mind, the government has approved, or cabinet has approved, a mission for cotton productivity. This will be for the period of 2026 to 31, 5 years. Okay, why? What is the goal? To enhance the global competitiveness of India with respect to cotton production and exports. Financial outlay is roughly 5,600 crores, and the 140 districts have been selected across 14 cotton growing states in our country to implement this mission. Okay. So what is the mission? The mission is, aims to modernize the production and infrastructure to promote high quality exports of cotton of our country. Okay. The focus areas under the scheme are high yield seed development, latest production technology, creating testing infrastructure, and promoting export of cotton. All these are the focus areas of the scheme. Remember the name of the scheme, Mission for Cotton Productivity. Okay, right. These are the things that are there in Ministry of Agriculture. Now we will move forward. Ministry of Food and Public Distribution, we will see some aspects. First thing is Cabinet approves extension of the SARTHAK-PDS scheme. You see, this is something related to, supporting the transportation of food grains under PDS across state borders, and providing some financial support or, assistance to the PDS dealers or fair price shop dealers. Okay, right. So the Union Cabinet approved the extension of the scheme. Already the scheme is there, SARTHAK-PDS scheme, until March 2021, means up to 5 more years. Total outlay is 25,530 crores. What is the objective? It is for providing assured financial support for intra-state movement. Okay, means from one state to another state, proper handling of the PDS food grains, and a fair price shop dealers margins under the act. You know very well, this act is there, famous act, National Food Security Act of 2013. Okay. What is the goal of the scheme? The scheme drives modernization and reforms through advanced technology in the PDS system, public distribution system. Key reforms that are being taken up in the SARTHAK-PDS scheme are modernization of logistics, like end-to-end computerization, GPS tracking of the trucks that are carrying the food grains, etc. Then digital transparency, ensuring digital transparency and efficient grain distribution to beneficiaries. Okay, remember the name of the scheme, SARTHAK-PDS. Okay, right. We will move forward. One important news is there about the coal and the gasification of coal. The cabinet also approves the scheme for coal gasification. Okay. You are very well, coal gasification. We have been talking about it for long period. About since a decade back, we are talking about it. Finally, it is becoming a reality in our country. Okay, so the cabinet approved a scheme for promotion of surface coal or the lignite gasification. Why? The coal will be converted here into something called as a synthetic gas. Simply, we call it as syngas or syngas. Okay, right. Total outlay is 37,500 crore. You see, incentive is given for companies up to 20% for plant and machinery. Purchase means 20% subsidy is incentive is given of the cost of plant and machinery. Okay, and this support will be provided in 4 installments. Okay, and people or companies can apply for the to win this bid or contract, and there will be selection of projects will be conducted through a competitive bidding process. Okay. However, there are caps on funding. 5,000 crore rupees cap. 5,000 crore rupees cap is there per project. 9,000 crore cap is there per product, and 12,000 crore per entity or group, combining all the facilities they are creating. Okay, this is something about the coal gasification scheme. Remember it. And another important information is there pertaining to Ministry of Home Affairs. A committee has been constituted to study demographic changes due to illegal migration. How the demography has changed because of the illegal migration. Okay, very important one. The committee has been constituted under the chairmanship of Justice Prakash Prabhakar Navlekar. Okay. The committee has to report its recommendations or studies within 1 year, can be extended by 6 more months if it is not completed. Okay, so it is the high level committee to study demographic changes arising from illegal immigration and other abnormal reasons like illegally entering in India, okay, without any documents, etc., etc. Okay. What is the mandate of the committee? The committee will analyze structural population changes at religious or social community levels. Okay. Terms of reference, further terms of reference, if you see, identify factors behind the changes, recommendations on deportation, and strengthening border management. These are the TOR of the committee, terms of reference of the committee. Very important because of the developments that are taking place in the country, especially in the northeastern part of the country. Very, very important. Okay, right. Now, sports. Comments invited on draft amendments to National Anti-Doping Act. You see, doping is a very big headache or big problem in sports. We want to keep the sports clean, okay? But knowingly, unknowingly, the sports person resort to doping, and which kills the sportsmanship spirit, and it dilutes the integrity of the sports. Okay, in that context only, there is an act, very important act is there, National Anti-Doping Act is there, and some more amendments have been proposed for that act. Okay, right. What is the core objective? It is to align regulation with the World Anti-Doping Code. Okay, at the international level, this code is there, World Anti-Doping Code. So to make our Anti-Doping Act further, to align our act with the World Anti-Doping Code, these amendments have been suggested. Okay, and to establish penalties for trafficking and administration of prohibited drugs. Okay, penalty is up to 5 years of imprisonment or 2 lakh fine for trafficking or administering prohibited substances to sports person. In the case of aggravated offenses like administering it to child sports persons, penalties may increase up to 5 years. Okay, for involving minors, and if it is done on commercial scale or organized, it is done with the help of organized crime syndicates. Okay, remember it. Sometimes it becomes important, right? See, last month our Honorable Prime Minister has visited several countries, especially has visited the Nordic countries. In that context, we will see the outcomes of the visit. Okay. So first, bilateral talks with the UAE. Okay. Uh, he visited UAE and it resulted in landmark agreements across sectors like energy, technology, and the defense sectors. Okay. Energy and infrastructure, if you see, strategic collaboration has been discussed on LNG, crude oil storage, and ship repair cluster. Defense and maritime, industrial collaboration and workforce training for the maritime sector has been discussed. Tech innovation, if you see, agreements to establish a joint supercomputing cluster has been discussed. And UAE came forward to invest $5 billion, to be explored by UAE entities for investment in India. Then India, Italy. Okay, if you leave out that melody, etc., kitna chocolatey hai melody, itna chocolatey kyun hota hai, etc., etc. We will see the things that are important from the for our examination. Agreements have been seen in defense and education. You see, there is an agreement on industrial roadmaps for defense and higher education. Mobility, two countries have signed a declaration of intent for the facilitation of mobility for Indian nurses to Italy. Okay, human resource mobility. Then cooperation, if you see, agreements on critical minerals, maritime transport, ports, and research have been concluded. You see, some strategic sectors have been identified, such as critical minerals, maritime transport, and agriculture. These sectors are targeted for deeper bilateral coordination or cooperation or collaboration between India and Italy. Okay. Then if you see India and Netherlands, the strategic partnership of 2026 to 30 has been signed. Okay. One more thing is India, Italy, also the relationship now has been elevated to special strategic partnership. Okay. Which we have with a few more other countries. Okay. Like France, etc. If you see the details, India and Netherlands strategic partnership, it was officially signed, okay, which will guide future ties. Tech and energy, if you see, both countries agreed to expand cooperation in semiconductors, critical minerals, and renewable energy. Both countries focused on agriculture as well as migration and mobility framework, especially migration from India to skilled people, okay, skilled workers moving from India to Netherlands. Key focus areas of the discussion were semiconductors, critical minerals, and renewable energy. Okay. Then India, Sweden. Strategic partnership has been established now. Okay. Security and economy, you see, strategic dialogue for stability and next generation economic ties was discussed. Innovation, in the area of innovation, you see, cooperation in emerging technologies like quantum computers, etc. Trusted connectivity and green transition. Mobility wise issues, you see, facilitating movement for students, researchers, and skilled workers. This has been discussed. Okay. Then India and Norway, finally, cooperation expanded across strategic sectors, okay, in technology and space, infrastructure, energy and science, okay, in all these areas, discussions were held. Then very important, third India Nordic summit was held in Oslo, okay, to further deepen the multilateral ties between India and the Nordic countries, okay. You see earlier, first India Nordic summit was held in 2018, second was held in 2022, and after 4 years, this third summit was held. So in this, India joined Denmark, Norway, Finland, Iceland, and Sweden. You see, these are the Nordic countries: Denmark, Norway, Finland, Iceland, and Sweden. Okay, so discussions were held on topics related to global governance, strategic and strategic and economic aspects, and innovation and AI. Okay, the key areas that were discussed are multilateralism, defense, trade, climate action, artificial intelligence, outer space, and tourism. Okay, right. And finally, this is the final topic for our discussion. India-US framework on critical minerals and rare earth minerals has been signed. You know very well, critical minerals or rare earth minerals have become very much important. So in that aspect, this framework has been signed. Okay, India and USA, they have signed this framework on securing of supply in the mining and the processing of critical minerals and rare earths to increase the supply chain cooperation. Why? You know, the supply chain is now concentrated by only one country, that is China. Especially these critical minerals and rare earth minerals, China concentrated it. So to overcome that, USA, both India and USA are trying. So the important aspects in that are mining and processing. If you see, enhancing collaborative efforts in the extraction and refinement of essential minerals, that is there. Then recycling and scrapping. If you see that, focus on the effective management and recycling of critical mineral and rare earth scrap. Then strategic investment, facilitating targeted investments to strengthen global supply chain resilience. Okay. Focus areas are mining of rare earths, processing, recycling, related investments, and scrap management of these things, critical minerals and rare earth minerals. Okay. So these were the lift out topics in the monthly policy review of May 2026. Study them, lot of valuable information is there. Okay. Right. In the next session, I will come up with another topic. And until then, you have a very good. See you next time.